FairTax, and that was in 2005. And at first I kind of chuckled and I laughed. I said, oh, that's funny, FairTax. That doesn't go together. Tax, fair, hit right. So I laughed it off. And I didn't really think much about it, because I didn't think it was a serious idea. I just thought, oh, okay, somebody's written some book and called it the FairTax. But then about 2007, they came out with this book. It's called FairTax The Truth, Answering the Critics. And it was the second time I'd seen that FairTax, and a friend of mine, Michael, he said, hey, you know, you heard about this FairTax thing? You should check it out. And so I looked at the book on Amazon. It was getting up there to be the #1 seller, and I think it was 2007 it came out. And I ordered it. It was a little cheaper than the first one. It was only like 10, 11 bucks. And this one's really unique because it went from the original FairTax book, where they explained what the FairTax was and their concept and how they had worked for 12 odd years to come up with this idea. And this was their response to all the people that responded to the first book. All the people that said, oh, that'll never work, and oh, your math is wrong, and this is ridiculous. They came out with this book, which is Answering the Critics. Now, the core concept of the FairTax is to eliminate the income tax and the payroll tax. And in its place, they're going to give every American a rebate up to the poverty level, so that everybody's given needs of groceries and health care is paid for. Everybody starts on a level playing ground with the rebate. And then
it's like a deductible there.
Yeah, kind of. You get your money up front like a rebate. It's not a rebate, you don't get it after it, you get it before. So every month. And the mechanisms are in place because they already do cards and certain things for food stamps. So it's not like transitioning to that kind of system is going to be that difficult. So they give everybody the same amount up to the poverty level. So everybody can go out and buy their health care, buy their food, take care of their house. And then, when you buy beyond that, when you go out and you buy a car, you see the price of the car, and then as part of that price would be a 23% fair tax that everybody pays. So you buy a stick of gum, you pay for a massage, you buy a new car, you buy a house, new house sales only, not used, and they take this 23%, and that goes to the federal government. So you wonder, well, how do we do that? Well, first of all, we get rid of the income taxes. So no longer do you know a difference between your gross pay and your take-home pay, because they're the same. You get your entire full paycheck. What happens is, right now with the way the system works, is all corporations, businesses, people pay for the embedded taxes. As a company, if I'm going to sell a widget, I have to pay taxes to the government. So I have to adjust my price accordingly. And every system along the way, from the suppliers, from the guy that creates the steel for the car, from the company that builds the car, from all the little odds and ends and pieces, all those companies and all those pieces, they've all raised their money. It's the concept of embedded taxes. They've raised the price of what they're selling to be able to pay for those corporate taxes. Because if I'm a business owner, am I going to just eat the cost of the corporate taxes, or should I raise the price of the car a little bit so I can take that portion of the money and pay my corporate taxes and still have my profit? So if you take the concept of all these embedded taxes that everybody's paying, is really your average person is paying for all these businesses and all these embedded taxes already. So all we're doing is shifting where the income is coming from. instead of it coming from the embedded taxes, we're going to remove the embedded taxes, and in its place, put a 23% fair tax. So now when you go to the store, you got a $100 item. The corporations are no longer selling that item for $100 because they don't have to pay the embedded taxes anymore. They don't have to pay your payroll taxes anymore. They don't have to match your Social Security number. So they can reduce the cost of the item that they're selling from $177. And as the research that they've done over the years have shown that this would be about the average rate. It would be about 22 to 23%. So, now that item is selling for $77. Yes?
This question, I don't want to interrupt your train of
No, that's
thought,
fine.
But the Social Security and Medicare is also withheld, and as employers and employees share that. Well, all this, the fair tax will be the umbrella that covers all of what is now withheld, and there won't be any set aside.
No payroll tax,
for one or the
no
other.
income tax. So the corporations, your employer's not going to need to match and contribute to your Social Security. You're not going to get that taken away from you anymore. You're going to get your full paycheck, your take-home pay.
But it's the state that will take the big hit. I think the state will be.
Yeah, the state. This is at the federal level.
Right.
This is now. It's possible that a state could institute a state fair tax. The fair tax is inclusive rather than exclusive. It's factored within the price rather than a sales tax, which is you take the final price and add the tax on. The fair tax is in the price. So going back to the $100 item, the company's now selling it for $77, but at $23 for that fair tax, you're still paying $100 for the item. DVD player on sale for $100, $77 goes to the company, $23 goes to the federal government.
So the consumer doesn't actually see the tax.
You see it on your receipt.
It'll say $23
Yeah.
is the tax, and then it's actually paid for.
Yeah, you'd have $77 just for the price of the item, but you'd see it because it's inclusive. So the price on the shelf is still $100. But when you see the receipt, 77 of that goes to the company that you bought it from. 23 is what they're paying to the federal government out of what they just made. And then, of course, $100, you're just going to have your state sales tax. So the price that you pay at the pump, the price you pay at Best Buy, it's all the same.
What about services and investments?
Services, investments, treated no different. Now, investments might be a little bit different because you've still got interest earned. This is really on prices at the retail.
So there is no tax applied to interest?
I would have to check on that, the details of that. But the core concept is the payroll taxes and the income taxes.
So is service tax just like a product?
Yes. So now, and the other thing about this is it's designed to be revenue neutral. Meaning, when they studied this, and they actually went out and they got economists, they talked to people like you, they didn't talk to politicians. Because politicians find it hard to invest in the fair tax. Because what politicians have found out is they can buy your vote with money. They can do it one of two ways. One, they can hand you a check. Here, from the federal government. They've done that the past couple of years, haven't they? Just giving you a check?
Tax rebate.
Yeah, tax rebate. What's another way they've done it?
Welfare check.
Welfare check. How about they adjust the tax rates? So now, instead of giving you a check, you're not taking as much of your money. It's still the same. It's no different. It's the same amount of money. How different would it be? I mean, either write you a check or just not take as much from you. It's the same thing. So politicians have learned that they can buy your vote with money. Oh, we're going to throw money at this program. It's going to help you. It's going to tax the rich. It's going to help the poor. It's going to do this. It's going to do that. Vote for me, and I'll support you with my votes and my money. Fair tax removes that ability. Because now, you, as an American, get to decide where you're paying your fair tax. You want to pay it to the neighbor who's babysitting your kids? You want to pay it to your massage therapist? You want to take a trip?
You said something about when you started, new homes would be subject but not existing homes.
Right.
So-called used homes. that would not be,
fair tax wouldn't apply.